and usually you leave on like Thursday night, and they come back on Tuesday, and that's when my work week starts. My work week starts on a Tuesday. So good to be with you here on this is Bulls versus Bears, the strategic market forecast, and we're gonna go ahead and so we're live on YouTube. So good to see all you YouTube people. It's early over here, so I look a little crotchety. Big hello to Kira, my daughter. She's tuning in. So nice to see you, sweetheart. If you're on the live stream, and again, we're going to do Bulls versus Bears right now. Okay, we're going to turn off the waiting room. If anybody wants to come in live, you most certainly can. We're going to be streaming this on the school community and our Pip and Run trading floor school community. We are going to we're gonna change. We're gonna make it Thursday, right? And then we're going to save it. There we go. So yeah, we're doing it right now. Coffee hour with Greg right now, and this is Bulls versus Bears, the strategic market forecast, and just getting things ready there. And then here is the link. Bulls versus Bears starts now. Okay. Going live. Right. Awesome. Okay. And then I think we have something here. Let's make sure that make sure you can hear my voice and see my screen. And so good again to be with you here for the Bulls versus Bears, the weekly Forex forecast. And we're going to go ahead and give a link out to the people right there. We're going to go there, and you can watch it on there as well, right? And we'll go ahead and post that. And this is an announcement and post. Okay. So here we go. This is Bulls versus Bears weekly Forex forecast. Again, my name is Dr. Greg McLeod. It is so good to be with you here today. I'm going to share my screen with you, and so we can get things going here. Okay. If you can hear me on YouTube, and go ahead and click the type comment, say hi, Greg, or something. Let me know. Your chats will come right into our private group, or you can click the link and join our private group as well. But let me go ahead and give the people the link. They're, and here we go. Okay, Bulls versus Bears, the strategic market forecast. And so good to be with you here. I'm going to mute your mics as you come in. And we're going to look at the Forex forecast for this week. And not just the Forex, but we're going to look at other markets as well. So good to be with you here. And so fantastic, and it's like, this, whatever. And so there we go. There's a business disclaimer on your screen to make sure you understand all there is associated foreign exchange trading. And so good again. Hey, Adrian, nice to see you in the room. Glad to see my buddy Adrian is in the room. Also, John joined us as well. Okay, I've been doing this for a long time. So good to be with you here. We have the risk disclaimer on your screen. Let's go ahead and go right into the economic news. I know my big source for economic news. I'm going to start sharing my screen, right? Got to share the screen. Got to share the sound, right? And so let's go ahead and share that. Share. And let's do it. Okay. So you can hear my voice, see my screen. Give me number one in the chat box if you can hear me. Yes, we're changing it to Thursday. We're changing. I do a lot of traveling. I travel. I go back to Texas. I go to Hawaii. I do a lot of traveling, and so I like. So usually you leave on a Thursday night and you come back on a Monday. That's what we do coaching on Tuesday, and I work 3 days a week basically. So that's what we're going to move this to coffee hour on Thursdays instead of Fridays. And so I went ahead and changed it in calendar. just click the link. It's just very simple. If I'm not there on Friday, you'll know where I was. Okay. Lake Trace University presentation of the weekly Forex forecast, which we've changed the name to the Strategic Market Forecast, right? And my name is Dr. Greg McLeod, and I'm a 30-year trading veteran, Wall Street insider, where I worked at one of the largest Forex retail brokers in the world. And so I'm here. I love educating people, teaching people about the markets, and that's my mission and ministry. Been doing it for since 2014 live. I did for the brokerage, so this is my 30th year, going back to into the 90s as a trader. And so having, history repeats itself. Some things never change, and so we can benefit. And what I've learned in all these 30 years, that the markets repeat themselves. They're a never-ending repeating cycle, and you can make money on cycles. If you knew what was going to happen ahead of time, you would know where to bet and how to place investment opportunities. So this is a risk disclaimer on your screen to make sure you understand all the risks associated with foreign exchange trading. And I've been doing this for a really long time, for over 30 years. So let's dive into the charts. We are going to dive into my market heat map, arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping, and what's not in the market. It's my top secret tool for finding trading opportunities in the market. It's more of a heat map. It's like my Swiss Army knife. The Swiss Army knife has a spoon and a fork and a knife and a saw. Well, this has all the stuff that I use. I try to get the brokerage to program it. They would not, because people were making too much money with it. Okay. Green is up, red is down. And so you get access for free. Come to mymarketheatmap.com and access the heat map and the economic calendar, two of the most powerful tools which I use in the market. Seems like we have a case of of dollar weakness here. We'll talk about that, as the war continues, rages in the Middle East. Operation Epic Fury is in full effect. And so the market, when we have geopolitical unrest, as I teach my students in mentorship, that we want to be long the U.S. dollar, right? And so let's look at the news going for next week, and we're going to actually start off with, we don't really have any announcements, major announcements for next week. Next week we'll be starting off March 11th, actually for Wednesday, which means we do have other announcements here. We can adjust the calendar by clicking the filter button, going to medium, and seeing if there's any other events, such as holidays. We can also add, if you put the none, that'll add the holidays, I believe. And then we click save. And so now we get a few more. Okay, so really nothing going on for Monday, which is great. Okay. Usually if there's no economic announcements during a day, prices will trade between support and resistance levels. We'll probably be range-bound trading. We just use those types of levels to trade. But when there's news like flags on certain days, well, then what we could see is a lot of different, we could see gyrations in the market, increased volatility because of news-driven events. Okay, so we don't get our first ones till Wednesday, March 11th, and we have inflation data of the United States. Inflation is one of the biggest drivers of currency valuations. Inflation reduces buying power, and usually central banks have to raise interest rates in order to fight inflation. And when they do that, that has the consequences of raising the value of the currency. Normally, in normal economies, if you have an economy like Turkey or Russia or Zimbabwe or something, high interest rates will not raise the currency because people are afraid of the economy, and the economy is just out of control. So Russia has like 17% interest, and Mexico has like 7% interest rates. Their currency is not very strong either, because they need a lot of interest to get people to even want to invest in their country, right? So high interest rates is not always synonymous with a strong economy, right? So we do have we have mortgage rates that come out at 7 a.m. Again, lots of U.S. data, so I would only probably look to trade the euro or the dollar yen. Core inflation rate month on month is supposed to drop from 0.3 to 0.2. That is the target that the central bank, the Fed, is trying to reach, and that's another positive. That's another feather in the hat of the Trump economy, right? We were at 9% inflation a year ago, and now we're at 2%, 0.2%. Inflation rate year on year, 2.4%. Previous number was 2.4%. Core inflation rate year on year, supposed to be a forecast to be unchanged at 2.5%. CPI or CPI stands for Consumer Price Index. That's a basket of goods that is indexed for inflation. People can see, like, what is this basket compared to last month's basket? And it's supposed to actually rise a little bit, 3.27, 0.57. Probably a little bit higher because we had a severe winter with a lot of an expensive, we have a spike in fuel costs, right, for heating oil and natural gas. So CPI, that's SA, 326, supposed to rise from 325 to 326. But inflation rate month on month, 0.2%. 0.2%, right? And so usually that means that if inflation is not going up, then the central bank does not have to raise rates, may have room to actually cut rates. And we could see the U.S. dollar, ordinarily this would weaken the dollar. But again, we have an exogenous event. We have the Iran, the bombing of Iran, the liberation of the Iranian people, and the removal of nuclear threat. That is going to that's actually going to make, just probably going to trump the economic data, right? 10:30 though, we have EIA crude oil stocks. That's going to be really good if you want to trade Canadian dollar. Canada is one of the largest suppliers of oil to the United States, so we might want to look at dollar CAD or CAD yen. Japan imports 99% of their oil, so they're very sensitive to oil prices. Canada is the third largest producer of oil, so you put the Canadian dollar and the Japanese yen together, you actually have an oil-based pair, right? A country that is highly sensitive to oil price because they don't have any domestic production. And then you have Canada, which is the third largest producer of oil. So we would see increased oil prices could shoot CAD yen higher. We have the geopolitical overhang with the Strait of Hormuz and the oil coming out of Iran, oil being choked off to China, and now China has to pay full value in the open market. They were buying it on the black market from Russia and Venezuela and from Iran. Now we have one of the largest consumers of oil now having to pay full price on the open market, and they were gone for many, many months. So that could deplete the oil reserves, continue to support prices, and this announcement would only send oil prices higher, right? This is the EIA crude oil stocks change, and the EIA gasoline stocks change as well. So we can trade currencies that correlate with oil, or if you're trading a CFD, you can trade the oil CFD, WTI CFD on your platform, right? Okay, we are still on March 11th. We haven't left March 11th yet. We have a monthly budget statement. The budget's supposed to balloon from negative 95 billion to negative 170 billion, and we're still the Department of Homeland Security is still not being funded. Make sure you call your congressman and get them to not hold America hostage by not funding DHS, right? So it's a good thing that the big beautiful bill actually funded ICE ahead of time, preloaded the budget, because but we're not paying for the TSA people did not get a check last week, right? The people who inspect and keep us safe in the airlines and the airways, especially under an Iran terror threat, that a retaliation. we need Department of Homeland Security, right? That's why we have Homeland Security, to keep us secure, and we got it as a result of 9/11. We brought that whole Homeland Security came about because of Middle East terror threats, and so now we have a group of people not withholding funds from to keep the government running on that. Okay, so anyway, I digress, but it all links together, right? We do have Rick's house prices out of the UK. That's a pound thing that's kind of medium term. A lot of these are medium, so I'm just going to go ahead and shut these off so we can focus in on the high impact items. I was thinking that maybe Monday and Tuesday had something, but we did not. So we don't need to stay in medium impact world. The red ones are high impact, and the high impact events move the currencies more. But in case there's not any high impact items, I'll go to the next tier. Okay, that's how I actually use that. But things like the GDP out of the UK is coming out there. Their GDP month on month is unchanged. Then that's for Friday. But Friday, a lot of data. Canada unemployment rates coming out, participation rate coming out as well, and unemployment change. Then the U.S. data comes out at 8:30. And are we going back to? We did have non-farm payroll already, right? Sean Evans says Congress security should get paid during government shutdown. That's what motivates them to get things done. They shouldn't get paid. Right. I agree with you 100%. We're all in it together, they say. We're all in it together. So if we're all in it together, let them be in it too and not get paid. And work towards the solution. Sean, you need to run the government. I vote for Sean for president. Or at least for chairman of a congressperson, right? Personal income month on month is supposed to drop from 0.3 to 0.2. Core PCE index also dropping as well. So we income dropping, but inflation dropping. And so it's probably a wash. And JOLTS job openings in Michigan consumer sentiment coming out, rounding out that week. Then we got some, Sunday we have some Chinese data, which could impact the Australian dollar. Okay, so we have a very light economic calendar. Let's go to our charts. We can go to charts from my market heat map. Is one of the many tools that are in there. We can go to tools. We go to charts. And remember, if you need a broker, go ahead and message me. I can give you a link where you can or you can scan the QR code and use the broker, which Elite Traders University students use. We use Ox Securities. Okay. Anyway, let's, there's our charts here. We can start with we won't have DXY here, but we do have the US dollar index. We're going to start off with the US dollar index. This is our dollar basket, the FXCM Dow Jones US dollar index, right? Oh, not US dollar. We don't have all the symbols here. We right there. There we go. And we don't need volume. We'll get rid of the volume, right? This is in my market heat map, right? And then we're going to start with, we can go out farther out to our 50,000 foot view. We can go out to we go for the week, right? And you can see that we are forming a bottom in the US dollar index. And we've got, this surge that we have recently in the dollar is a result of the war, of the Iran war, right? And where money is running for safety into the U.S. bond market. With that, that's going to. We've seen the dollar totally appreciate from being at a level here in the 12,553 on the U.S. dollar basket, and big bullish engulfing candles, right? And we have resistance coming here at 12,896, right? And we have a multiple bottom, this is a bullish pattern, right? where we have the supply. We have this complete demand zone right there, right, where we have a demand zone that is pretty strong. That goes back to June of 2025. Found support, buyers stepped in big, and we won't see any resistance until we see probably around 12,777 and 12,896. And then there's this gap, this very big gap candle here, right? Now, remember the President Trump and Pete Hegseth basically have said that we would see this could wrap up in 4 weeks. That's a month. So we probably would see a month of of strength in the U.S. dollar, which could take us to these levels. So bulls versus bears, I am bullish the U.S. dollar. Okay. All right, let's go to the anti-dollar. Let's go to the euro, EUR/USD. Now, the great thing about knowing about the how the direction and the overall tone of the U.S. dollar is that all the major currency pairs with like 80% of all forex volume is done in the U.S. dollar. So whether you're using Aussie dollar, Kiwi dollar, dollar yen, dollar CAD, those are the majors. So if we know where the dollar is going, we know where 7 currency pairs are going, which is great. So we can see that on the weekly chart, we have basically the opposite, the upside down. If you flip the US dollar index upside down, it looks like the dollar index. Why? The dollar index is about 20 or about 70% European currencies, right? So there we go. We got nice higher highs and higher lows. We have this topping pattern, this strong resistance zone here around the 120 area. I'll make that red. We have our supply zone and in red. And so that this whole area, I've seen guys have basically built positions, getting short, and then boom, we finally get a break of structure. We don't really have a break of structure. We have higher highs and higher lows. We have the same low here, but I would suspect that if we get a break below, say, the low of 115.33, we could see a further decline lower, right? So I would look for a move lower. We can take some Fibonacci's and we can get some major price targets. My typical price target when I'm shorting anything from a rally is a 38% retracement. So we could see the euro down at the 113.43 area before it's said and done. And I wouldn't be surprised if we got a further move down to the 50% retracement at 111, where we've got this old low from May 25th, 2025, or May 12th, 2025. And so we can see a further. So bulls versus bears, I am bearish the euro.
Don't buy.
Okay. Let's go across the pond and go over to the pound dollar. Let's go GBP USD. And we'll go there. Oh, pound dollar. Yes, here we go. This is the weekly chart there, and you can see the same thing. Remember, it's all versus the US dollar, right? So when we have so the dollar is strong, means the pound is weak. There's a lot of things going on there too. With the former Prince Andrew, formerly known as Prince Andrew, like formerly known as the group Prince, formerly known, and then you've got a lot of the whole Starmer controversy too with the Epstein files. So there's a lot of other things going on in the UK. So it might be the weaker of all the major currency pairs, right? Clear double top pattern. Rejection where we got up to the high of 37.70 back in June 30th, 2025. Rejection, a retest for a wave 5, exhaustion candle there, rejected into the zone, and now we look at the typical wave 4 target, and we're looking at possibly a move down here, right? So this is a classic 5-wave pattern, right? We got the 1, 2, 3, 4, 5, and we're in probably a wave A, right? So we might see a rally for ABC, right? If you and if you're not sure about how this stuff works, that's a good reason why you should check out mentorship, right? Right. So then we can see an ABC, right? So we might see a little bit of a rally in that, but this is just acting as it should, right? So Bulls versus Bears, I am bearish. Okay, moving right along. Keep it snappy, keep it spicy, keep it moving, keep it rolling. Okay, let's go into we can go dollar Swiss, USD, CHF, and it has been kind of appreciating some. Swiss National Bank has been trying to intervene in their currency. Currency has been a safe haven in the past. That's where illicit Nazi money and other billionaires seeking to hide money would go to Switzerland. Those things have changed, but still you can see that even though they have negative interest rates, people want to put money in Switzerland. All right, but we do have this little push up here, down here at the to the high of about 78.20, and it is still a downtrend. So I know if I were trading, the dollar story, I would probably not use dollar Swiss. It's in a downtrend. It's going straight down. It's I'm bearish. So let's keep it going, and let's go to keep on the theme of the dollar here. USD. Let's go CAD. Let's go across the ocean here, and we can go to the weekly chart, and you can see that we've been mulling around sideways for a long time in this dollar CAD. The energy play seems like it would come into play, but there's a lot of geopolitical stuff going on with basically Trump snubbing Canada and Canada trying to make themselves more than what they are. I love Canada, but they've my heart's with Alberta, so we can see that it really, with this, nothing really going on, and the tariffs and things, that we haven't really seen much of a move higher, right? Sideways consolidation, it could go either way, and there are tweezer bottoms there. This is the only thing that makes me bullish on dollar CAD, and that it has the dollar in it. And if we go back to a lower time frame, maybe we can see something a little bit how about, let's go to a 4-hour. And it's just a lot of chop, right? But we do have a little bit of life right here, a double bottom, a break. We need a break of a high of 37.28 to really get this uptrend moving out of this consolidation, out of the sideways move. We do have higher lows, but we need to break out, right? We need to clear this all this stuff up here, right? Price has a memory, and it has a memory that, hey, we have not done anything yet. We're stuck between these two areas. Once we get out there, then there's some open space, right? There's open space here, and there's open space here, right? And there's open space up here. So, right. But we're making higher lows. So even though we did see the oil prices spike up, it's not benefiting. We got that one little spike down here, and that's it, right? Okay. Let's go to the dollar yen. Let's stick with this dollar pair. Oh yeah, Bulls versus Bears. I'm actually bullish dollar CAD, right? Let's go to USD JPY. USD JPY, and this is a very good carry trade. You got great interest. Interest rates in Japan are about 0.1%, while here in the U.S. they're about 4.3%. 3.9 or 4. So you get this carry trade that is very, very a beautiful trade, right? Let's go out to that weekly chart. And we can see that we do have, this very strong uptrend. We've been moving sideways for the last year, right? High of 62.11 area, lows around the 140 area, and we haven't made a higher high. We haven't break that 62.73 area. However, we do even within the sideways consolidation, there's trends within the consolidation, right? And we do have an uptrend, higher highs and higher lows structurally, and we're meeting some resistance. This was a double top of a rejection, and now we're hitting that area again, and then we can see a break. So I'm bullish dollar yen. We've got the Go USA theme here, USD JPY. And ever since the initial, we had an initial drop in dollar yen on the attack, and then prices will start rallying back up in the favor of the U.S. dollar. So bulls versus bears, I am bullish, right? Long-term bullish. I have a target back at the old high of 62.11, and we're at 57.71, so that's like 500 pips. So that's good, right?
Bye.
Okay. And let's go ahead and move over to we did euro, pound, dollar, yen. Okay. Aussie dollar. Let's go to the land down under. And then we have what's going on here. Ooh, we have an abandoned baby pattern here. Oh, see, it is. I mean, this was a strong uptrend. I mean, we traded this. This was beautiful. Oh yes, love me some Aussie dollar. However, something happens. It's called Iran. It's called the war, and so now this is dollar. This is dollar strength, right, coming into play. We had a nice run though. We ran from 59.21 back in April, all the way up a year to go 2,000 pips, right? No, not really quite 2,000. No, it's like 1,200 pips, right? So 1,200 pips in a year, it's not bad, right? So we expect a pullback. We expect some retracement. So we can use our Fibonacci to connect the low from that April 2025 up to the high where we hit our highs. And that's what Fibonacci is for. And we can see we got a while to go. We can go down to 68.60, 38% retracement with our typical retracement. And we could see Aussie dollar correct down to the 66.79 area. That's the 38% retracement. Try to find an arrow here. And so we're looking for a pullback to there, right? We can look for maybe any type of a rally, being able to sell rallies, right? You want to sell high like Snoop Dogg and buy low. So let's just go down to a daily chart. And you can see we have this topping pattern that we're in which the bulls have struggled trying to make new highs, higher highs and higher lows, higher highs and higher lows, right? Structure. And then we have this break of structure. We have a same high, lower low. And so, we are on our way down. And this is a nice early catch. We had a trend line break. And we've got candles falling down, right? And so we can have a really good risk reward if we were if we were looking at something like that. Our take profit at the 38% retracement. That's a 1.5 2-to-1 risk reward. We can tighten that up to the high of the candle right there. That gives us a 3-to-1 risk to reward ratio, right? We can maybe place our stop above the high of the candle. Yeah, a 3-to-1 risk to reward ratio for a trade in Australian dollar. Okay, so Bulls versus Bears. I am.
Don't buy. Don't buy.
All right, let's go ahead and move on to the Kiwi dollar. This is moving right across the Tasmanian Sea there, right? Another great currency that does really well. Probably after the war, if the war ended tomorrow, Australian dollar, New Zealand dollar will be the first two currencies I would jump into personally, right? This is our weekly chart. Oh, it's daily chart, right? Weekly chart. The same kind of thing happened, right? But we've been in a sideways range, almost a downward. We've been a downward channel, but we've held the lows, right? Right. And we've found lots of support in this 5,400 area. Oh, we lock that, right? Right. Lots of support, but we're seeing descending. Our highs are descending too. So we have like a descending triangle, and this is breaking down. We had a double top recently. Rejection at the 61.22 area. Bearish rejection right there. And we have maybe a demand zone coming in around the 56.33 area, some 500, almost like 480 pips away, right? That's what we're looking at, right? That's so again, it has dollar in it, and the dollar is strong, right? So Bulls versus Bears, we are looking at New Zealand dollar. We're looking at as a bearish that that's a very nice a very attractive risk to reward there too, right? Do the same kind of thing. We can wrong tool, right? Stop above the high, take out the low, right? Not so attractive. If we can if you go to a lower time frame, you can probably tighten up that risk to reward right there, right? Again, this is not a trade recommendation. This is something I would possibly do. Just my 2 pips worth. This is for education only. As you read the risk disclaimer. Okay, let's go into gold, the shiny stuff, what I like to look at too. But before we go to gold, let's go to Bitcoin. Bitcoin's staging a little bit of a rally. And let's just check out BTC USD, and we're going to try the index, and we can see that we are staging a rally after a big drop, right? And it comes at the opportune time. We take a fib from the highs of the low of about 14,009. Can you imagine the low of 14,924 to a high of 126,356? We landed at just a smidge below the 50% retracement. Got as a low of 59.71. We got that low on February 26th or February 2nd. February 2nd, right? And so we get a rebound right there, right? So we see a little bit of rebound. We have a beautiful head and shoulders pattern. You can see our head and shoulders comes in pretty visible there. We got our left shoulder, right, our right shoulder, right. So we have a bearish head and shoulders pattern with a clearly defined neckline, right? But we're just wondering if we hit the projection. The projection for the fall is a lot deeper than what we are seeing, right? So I'm not saying that this is a fake move or maybe a false move, but typical fall. We take the height of the head to the neckline, and you can get real subjective where the neckline is, but the last shoulder connecting the shoulders makes the neckline. And so we would actually project a lot lower, right? That takes us to about 35 like say 35,000, right? Now let's do a Fibonacci projection, which might give us the same thing. If we take the top of the head, this last shoulder, and our projection, our 100% projection is, I guess, would be 49,895. So, people are jumping on this with this long wick, but we might not be done yet. It's probably not soup yet. We might need another capitulation. We have an old low right there to it, 49,895, where they actually marked it down here. They marked it over here back in August. So I think that might be a stop for this thing to hit, right? The 100% expansion matches that wick, right? So we have the rule of symmetry. So bulls versus bears, I think this is a trap. I think it's going to go lower. So I'm saying, I'm bearish. Okay. Okay, now let's go to gold. Okay. Gold's a big deal. I traded gold last night. I traded the mess out of gold. I traded so much gold. I was hitting gold, 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 gold. Okay. Gold. Enough gold, right? Enough gold. Okay. Let's do this. Single chart. Clear all this stuff out of the way. I got all these. Okay. I got my indicators going nuts. Stop. 35 alerts. Okay. Let's go to gold. Oh, you know what? I got gold here, right? Because I have too much stuff on there. Too much. Can't try to keep it simple. Keep it simple, Greg. I'm working on it. What? All right. All right. Oh, yeah? How about XAUUSD. Okay. And there we go. Pepperstone. I used to work for Pepperstone too, right? Gold, it's an uptrend, right? But that candle, bearish engulfing on the weekly, we have not seen a bearish engulfing ever, right? Right, with these dueling lightsabers here at the, we got to a high, all-time high, 5,602.60, the highest value of gold ever in all humanity, all human history. We experienced that all-time high. There is nothing higher. I mean, can you imagine $10,000 gold? Just imagine. It's like imagine. Let me get a couple ounces before we do that, right? All right. So we got this weird candle, a bearish engulfing candle that's outside the previous week. That's bearish. But let's dive deeper to see what's going on here. Let's go back and go drop it down to a daily chart. Okay. Well, that's the flash crash, right? Wiping out a lot of stuff. But we've got like a bear flag forming. Oof. Right? You got the flag with a flag pole right here, right? And can we clone that? Will it let me clone? Well, can I clone? No, clone. Yes. Bring in the clones. What's going on here? Oof. Okay. Refresh. Okay. Yeah, dollar's exactly. Adrian says dollar's very strong. And then you gotta understand that what is gold? Gold is XAU / dollar, right? So if the dollar is strong, this baby falls like a rock, right? Let me refresh it. And I think it's stuck. It can't handle it. It can't handle it. You can't handle the truth. What's going on here? Right? Ooh. Control minus. Oh, there we go. Right? Yeah, like I'm losing my charts. XAU USD. We're going to use Pepperstone. And we're going to get rid of the volume. We don't need volume. Pump up the volume. Pump up the volume. No, okay. Yeah. Yeah, ABC for exactly. Adrian says ABC formation, right? You got your A or 1, B or 2, C or 3 later takes us back to the old low, at least 4,396.64, guys. Not only that shorting gold, you get paid interest, right? Because the dollar pays interest, gold does not. You pay interest when you're long overnight. You can hold a position overnight in gold and get paid interest. Probably not a whole lot of interest. And so we can see a move down to this area here, right? That is, right, that's 4,403. That's the low that we had back on February 2nd, 2026, okay? So that is a possible move to the downside that we could possibly see. And basically, what's so easy, if you pay attention to, I got some people who say, I don't look at the news and I don't watch the news and I don't pay attention to politics. And if you're trading, if you're a trader, it is your job to know what's going on in the world. You don't want to stick your head, you don't want to stick your head in the ground like an ostrich and ignore what's going on in the world. The economic calendar is your friend. And I found a lot of traders who trade, they don't use the economic calendar. They don't use a higher time frame. They're jumping in willy-nilly because they see a big candle. And they jump in on their phone, right? And they really don't really have a way or a method to enter the market, okay? And that's why we were offering our 6-week Pip and Run experience, and doors are going to be closing. So if you got that tax refund, let Uncle Sam fund your trading education, and we would love to have you. But this is going to be an amazing rundown. Basically the government is telling you, hey, we're going to bomb Iran for the next 4 weeks, and it could be a couple of months. Well, and the dollar is like saying, we're going to get stronger, right? So they've given you the playbook, right? And so it's up to you. Consult with your financial advisor, but it's saying that given the geopolitical events that are going on, this is and if you go back, you want to go back in time. Let's take a look at what went on with EUR USD, right? We're gonna go back in time. We're gonna go back. We're gonna go back to a weekly chart. And let's go back to the Gulf War, right? Gulf War is 93. No, so we can't use that. Okay. There was no euro during the Gulf War. Isn't that wild? There was no euro during the Gulf War. Well, we can look at the dollar yen, USD, JPY, right? And then we can see a repeat of history, right? When we go back, we had okay. Oh, Pepperstone didn't have the data, right? So probably we gotta go to okay. That's why you have to pick one that has lots of data. And guess who's not on here? I guess that's premium data, right? Let's try Skilling. Let's Skilling go back in time. Right. No, they don't go back far enough, right? But usually during geopolitical events, the U.S. dollar rallies. That's just it's just given. And so if it does, the history does repeat itself, well, then we can see the U.S. dollar move up from here. Okay. Any questions? U.S. 30. Okay. Yes, the indices. Let's see if we can get those up. SPX 500. How about that? And we can go there. And so we're getting a topping formation here as well, right? Not really on the weekly chart. Bulls versus bears, right? We're looking at this rounding formation and maybe a pullback of some kind. It's taking too long, right? Anytime it takes too long to make a new high, that's a warning sign. That's a warning sign. Like we learned at Pip and Run, that there's always a change of momentum before there's a change in price. This was a very strong momentum, right? Continuation. Now we're not making new highs. Momentum is slowing, right? So this is probably a precursor to a drop. I'm looking for maybe a pullback. Maybe, we don't see, we could get another pullback, maybe to the 38% retracement, right? I wouldn't feel comfortable trading this. We might drop. We're in a range. When that range breaks, we can see immediately 64.87 and then 61.65, like in one day, right? So I'll be very, very careful there. Let's go down to a daily chart and take a look at that. Thanks for asking. We're just moving sideways, and you can play the sideways price action, buying support, playing resistance, right? If you're day trading this is a great market. Buy low, sell high, buy low, sell high. You're just ping-ponging. The thing is, it's like musical chairs. If you're the last one standing, you don't have a chair, and this thing drops, right? So just be very careful. We're just ping-ponging between 67.31, 90, and 7,000, right? We're just kind of ping-ponging in there. But the longer it takes, the bigger the break to the south side, right? And remember, when we're talking about the index, we are talking about it's S&P 500 /dollar, right? So it's like I have to use dollars to buy the index, but if the dollar is getting stronger and I'm getting a higher rate of return safely, how long will I keep putting money trading my dollars for S&P 500 when the dollar is going up in value and this is moving sideways? So you have to think like the market, the supply and demand. There's going to be a more demand for dollars because it's a higher yielding thing, right? From a macro point. But when you are maybe going down, maybe you trade down to like a 4-hour chart, 4-hour, right? We're not going anywhere, right? But we're making some lower highs and lower lows. We make a lower low below 67.05. This thing goes bye-bye, right? Bulls versus bears, I am bearish, but I would want to see a break, right? Okay, let's go to US 30. The Dow Jones Industrial Average. Really? Okay. All right. We're going back to Pepperstone, right? Oof, look at that. 4 hours already falling off the map. Stop off my weekly. I want to start off my 50,000 foot view. We've already started. We can see this bearish pullback, right? Take your fib in there and just that way you can know like where we're going down the elevator, right? We're at each floor. I remember the old Sears department stores, right? You got women's lingerie, cologne, and popcorn, power tools on the next level. And the next level, you had like kids' toys and shoes, right? In the bar, and then you have the basement. You have the bargain basement, where the underneath the store, that's where they put all their cheap stuff, right? The clearance items, right? So this is like the floor of a department store. We're gonna we got power tools and this floor and women's lingerie and brassieres on that level, and then boom, we've got down here we've got shoes and cutlery, home goods on this floor, bedding. So we're gonna hit these floors, right, like in the elevator. First floor is actually 47,108, which is about 600 points away, and then we break that, then we've got fall to 4504, 2,000 points away, right? So I know the overall trend is up, but there's corrections within the market, and typical correction is like 10-20%, right? So we haven't had 10% correction in a long time. 10% correction takes us to 45,000, which is right about here, right? 38% retracement, 10% correction. So bulls versus bears, I am bearish the Dow Jones 30, right? And let's go to NQ. We'll throw the NASDAQ in there, right? NASDAQ is also struggling, long wicks, moving sideways. And, we get a 10% correction there. That takes us down to about 2,400, right? Or right there where we're at, right? But the 30% retracement was 22,504. Bulls versus bears. I am bullish if we can break 26,361. That would mean higher highs and higher lows, right? However, and that's a big one, right? We need to see, we can see, right? The other way is we break lower, right? To 38 or to the 50% retracement, right? So these are the key levels right there, right? We have our supply and demand zones across here and here, right? And we have our zone across the bottom, right? We break that zone bottom, then boom, look out below, right? Just like we had here. We moved sideways back in February. Oh, February of last year. Look at this. February 20. Doesn't time repeat itself, right? We went sideways, and then March we dropped. In April we recovered. Oh, this is the tariffs, right? This was the tariff drop, right? So interesting. Price does have a memory. Typically, like this is abnormal because March is usually a positive month for the market, but it was not last year, right? So we actually went down for the month of March. Okay. What's the other one? Russell or US 2000? Is that the other one? Yeah. I don't know if anyone trades that. That was real popular for a while. The US 2000. Can we get it here? I'm just going to go Pepperstone, right? It's doing the same thing, right? They're all doing the same thing. Pick your poison. Which one do you want to use? We have a rise. We have a topping pattern. Again, this is US 2000 or the Russell 2000 CFD versus the dollar, right? So anytime we see a drop, this was the tariff scare. The dollar gets strong during tariffs. We're going to have a two-part because all the tariffs, there's going to be a 15% worldwide tariff coming out, and you have the war going on. So you have two reasons why the dollar will be stronger. And I wouldn't want to be in this I wouldn't want to be along in this, right? But again, there are going to be day trading opportunities on the lower time frame, right? But you can see that, yeah, it goes up, but then the red ones are very strong. The bearish candles, I use red candles for bearish candles, and we can see we're in a down move right now, big one, right? And in fact, if we go to our 4-hour chart, I mean, we just moved sideways and we just broke south, right? We just move. I mean, this is not bullish, right? This is bearish, right? All right, so those are the U.S. indices. Let's look at oil. One last thing we'll look at is oil. U.S. I'm going to use U.S. oil. And do we have, does Pepperstone have one? WTI. There we go. Look at that. Woohoo, breakout, new high, right? Almost a parabolic move. Let's go to a weekly chart. And we gapped. We gapped higher, right? Now during this whole thing, we could see, with the Straits of Hormuz and Middle Eastern oil, get China coming in line here to buy oil on the open market. That's going to shoot much higher, right? We're going to run into Fibonacci's from here to here, right? This was our downward move. So next target would be like 83.24 and 92.50. There's an old high at 94.56. So we can get another $16, another $15 in the upside move. But we could go a lot farther, right? Because this is also, remember, we were negative on oil, right? Okay, so if you do a wave count, 3, 4, okay, let's do the wave count, right? The wave count is kind of scary. 1, 2, 3, 4, 5. Oh, so what's this? What comes after 5? Well, my students know 1 or A, right? Let's just do A, right? A is scary enough. Go fill up your tank right now. A or 1, B or 2. Now that should scare the mess out of you. A or 2, or B or 2. C or 3 you later. Takes us to 130.80. Just as a double top. That's not saying we don't extend, right? If we extend 179, right? Matches, right? And then we have the old high of 150, right? Or the high of 2007, 2008, right? Right after the financial crisis, right? So we could see a breakout above resistance. I mean, this is a bull flag, right? Oh my goodness, this is a flag pattern. You get the flag pole from 5 to A is the flag pole. Project that. Oh, the projection comes out in the same area. That's going to be inflation. You got to be able to drill your way out of this one, right? This could be pretty catastrophic there. I mean, and for the economy, because everything runs on fossil fuel, right? Trucks, clothes, anything that you buy comes on a truck or a train, and that uses diesel. And so that's going to push the price up, right? Yeah, inverted head and shoulders. There are just so many things here pointing to the north side here. I thought, oh, this is a downtrend, but this is a downward wedge in a sideways market, right? And we already had this level of support. We had this level of support, and now we're heading back to this level of resistance. Right. So we've been stuck in a big range for all this time, right? So inflation would be pretty huge, right? It kind of ties into a chart that I wanted to show you guys. And this chart was created by someone 100 years ago, right? And he actually put the year 2026 on 2026. And there we go. The Benner cycle. Okay. This was done in the 1800s, right? Yeah, the Benner, yeah. So this is it. 1883, 1897. This is a boom bust cycle created by by Benner back in 1897. This is 2026. The rally from 2020. We're in rally mode right here, right? But look what happened in 2007. This guy did this back in 1897. he predicted the crash of 2008 because after 2007 we had a rally and then we dropped all the way to 2013. These are numbers written in the 1800s, right? And so we're at peak price, and we can see a drop that'll take us to 2032 before we see our next rally in 2034. So this is a pretty amazing forecast. You can see, look, 1999, and we had the crash, the dot-com crash in 2000, right? I'll go ahead and give you guys the link to this if you guys want to take a. You can look at it. It's called the Benner cycle, right? I just kind of zoomed it in. Maybe it's a little distorted. Benner cycle. So he wrote this in 1980. We had the crash 87. He's within 2 years. That's, and look, 35, the crash, the 1930s crash. Hey, if you're still around, guys, 2053 is going to be rocking, baby. 2050 is going to be amazing. But I tell you, 2032 is going to be primo. But 2027, ooh, I mean, if it's anything like 89 or any other years projected, get yourself ready. Anyway, guys, I hope you found this amazing and helpful. Do me a favor, if you're on our meeting group, there's when you exit, there will be a video for you to record to give us tell me some of the aha moments or something that you've learned. Also, make sure you like, share, subscribe. And I love you guys. God bless you guys. Remember, we're here at Bulls versus Bears, the strategic market forecast. We're here on Thursdays at noon Eastern time. Enjoy your coffee. This is Dr. Greg signing out. Peace and pips.